Bill Hench, one stock you like in the Royce Micro-Cap Opportunity Fund is Swift Transportation. Stock's down over 40% this year. So if lower gas prices and a growing economy don't help this trucker, what will?
Well, you've had crummy news from retailers recently, even some shipping news today out of the big ports, Los Angeles, New York, Long Beach. Not great news, but what you do is you need a place to buy these things, and the valuations are going to determine how you make your money. So if you can get these stocks, and it doesn't have to be Swift, there's a number of truckers also in the, with same statistics, with the same outlook, if you will, but if you can get them at a very, very low price, if you get a nice average price over time, and you continue to see better economic data, and not so much on the one-offs, but in general, monthly employment stats, longer term, what does employment look like, longer term, what do interest rates look like? If all those things continue to give you a little bit of growth, stocks like this with very, very low multiples should do well. And if you continue to get those low gas prices you're talking about, that isn't going to hurt.
All right, you're also bullish on the McClatchy Company.
Sure.
They're in the newspaper business, down almost 60% year to date. That said, they're making the transition to online, but are they doing it fast enough?
Right. You know, we jokingly say in-house that if you called this McClatchy Digital Services, it would get a 100 multiple points better than it gets now. It's made this transition, you're right. It's made a transition from a newspaper company to a digital delivery company. The nice part of the story here is that they're paying down their debt very aggressively. They've got a bunch of properties that are worth a significant amount of money, much higher than they're listed on their books at. Most of them unencumbered. I don't think there are any mortgage debt on these things. They've got some venture investments with some .coms, career.coms, careerbuilder.coms, cars.com, which they sold, that have proved very, very profitable. And it's a story that gets no respect, and it's a very, very low-priced stock, but one that we think is making that successful transition.
All right, another stock that you like, which has been having trouble this year, is Beazer Homes, down almost 30%. It's underperforming the other home builders like Lennar and Pulte. What turns this one around?
Sure. So one of the odd things about this recovery in the housing stocks was that the low end or the starter homes were doing poorly, whereas some of the bigger players that had higher priced items like Toll Brothers have done very, very well. Where you're starting to see finally data that's helping on the first time and the first time move up market. So at this price, at these levels, this is a great entry point for those entry home buyers.
All right, the last one has been a big winner this year. This is TRC Companies. Sure. This is up over 60%. This is a big engineering firm. So how long do you hold on to this one, because it is having a good year?
Sure. So this is one that we have owned a long time, and I think we're going to own it for a while because it's just getting known. It's got very, very little analyst coverage. One analyst does a good job covering it, but not known well in the street. Just starting to get profitable, just starting to really profit from a lot of investment that they've made over a very, very long time. So I think we're still probably closer to the beginning than the end on this one.
All right. Well, thanks a lot, Bill.
Great. Good to see you.
Thank you for watching The Street.